Hey guys, what's up? This is Andrew for TRENDLINES.com. So in this video, I would like to focus on the correlation between the SPY, so basically the global market, and AMC. This is also true for GameStop, but I'm going to here focus on AMC, and we're going to try to understand what this correlation can mean in terms of margin calls and in terms of market development for AMC if the global sell-off is to continue. So let's get into it. All right, so let's first quickly look at the chart of AMC. Okay, that makes sense. So you guys know this chart. I was here expecting a fifth wave that would develop in 1, 2, 3, 4, 5. So this looks like a first wave completed. Second wave correction, and we are now slightly below the 61.8% retracement, which is around 37.5, 38. So it's, it can be tolerated, some excess. We have support at 36.5, so it's not looking bad yet. We are looking still good. It's still a 1-2, but what is a bit worrying for me here is that we see a positive correlation between the global market and AMC. During the 2 days, the S&P 500 crashed. AMC was trading much lower as well. So I want to analyze this, and I'm going to come up here with some answers about what can happen if the global market sell-off is to continue. So first, quickly my analysis on the S&P 500, so SPY tracker. So basically, since the COVID crisis has started here and we had this massive move up, I can count 1, 2, 3. So for me, we are in a third, or maybe it's complete, whatever. So I see much more upside, all right, on this market. I see a higher third wave and then a fifth wave to come. So, maybe 2 fifth waves, so one here, then correction, then one more. I mean, overall, I am very bullish for the long term. But here, what we are having, guys, is not good at all. So let me get rid of this vertical line for now. This is a breakout from a wedge pattern after a bearish divergence. I mean, it's like everything here, market making high highs, MACD going lower, but we had this for already 2 months, but only after breakout, this is a valid signal. So here the breakout occurred. I told you guys this is not looking good. Here we had a reaction on the breakout trend line and then we moved lower. So I think this global sell-off will continue. So this is what I'm interested in understanding what mechanisms this could trigger. So to do that, I computed the correlation between the S&P 500, so SPY, so that at least the closing time is the same. So it makes sense to compute the correlation, and AMC. So what we can see in blue, you have the correlation. So the axis of the correlation is on the left. So a correlation is always between -1 and 1. 1 is that it's fully correlated. -1, it's like always moving in opposite directions. And in green, I added AMC returns. So the first thing we can see is that this correlation is rather positive, okay? Around 50% in average for the past 2 years. So those two stocks are correlating positively, but sometimes this correlation is negative, all right? This is the 1 month correlation, so it's smoothed data, but you can see that even by smoothing it, we still have a negative correlation, sometimes around -80%. And each time we have a strong move up, here, for example, the correlation is going down. Here, this one in June 21 is not that true. We're going to analyze this, but Jan 21, definitely strong move down on the correlation. So meaning S&P is going lower and AMC had very massive returns. It's true as well in April 21. So this is suggesting that something is creating buying orders, a bullish momentum on AMC whenever the market is falling. So guys, I think you understood what I'm talking here about. I'm talking about margin calls that hedges need to face to hold their short positions on AMC, GME, and any other meme stock that they are shorting. So that's why I think that if the global market sell-off is to continue, we're going to see this happening. But for now, we don't see it. The correlation is very positive. And once again, each time it was like this, guys, the correction was positive and then it was dropping and then AMC was going higher. So it can happen. It can still happen. Let me show you something cool. All right. So here, guys, I can add AMC. So we don't care. It's very small at the bottom because the price is very different. But what we're interested in here is to see what the S&P 500 was doing whenever we had those strong moves up, just to illustrate what I just showed you with the correlation. So we saw that basically there were 3 moves up on AMC. So the first one is here, AMC moving up by 300%. And on the same day, guys, the S&P was down 2.5%, okay? So this is an example of a day whenever a strong move down on the S&P to 2.5, right now we did -2, triggered a strong move up on AMC, margin calls. So it happened once at April 20, so it's here. Here you can see that even when AMC was going higher, the market was going higher too. So sometimes the positive correlation is working too. Just like we had in June 21, you can see that the market was doing nothing much and AMC was going higher. So the best example I have is in Jan 21. All right, this is the real good example. Once again, the market was dropping 2%, then 2.5%. So 2 negative consecutive days on the market, which is what is apparently needed to trigger those margin calls. So here we had 1 bloody day and then immediately we moved lower. Today is another, I mean, yesterday, Tuesday session was another bloody day. And I think it's going to continue, guys. So I'm not sure what's going to happen, to be very honest. But maybe a second negative day would trigger some margin calls. And we would see a strong move up of AMC that could break this trend line. That is, once again, even if technicals are not doing everything on AMC, it's very helpful. And many people follow this technicals. So if we have a breakout above this yellow trend line, there will be a lot of buying orders for sure. And you guys know that mostly it's like the hedge funds cutting their short positions that can trigger this strong moves up. And then I showed you guys already that yesterday or 2 days ago on AMC, the synthetic short interest. Yeah, so we have right now, okay. So we have right now 19% of regular short interest and 6% of synthetic short. And we can go up to 17%. I get this information from the option market. And like I showed you guys before, the big strikes with small delta that can trigger a lot of gamma are here. So 50, 60, 70. So we need to go to the 50 area before market makers start to buy like crazy as well. So let's see, but this is a scenario that is possible and that would create some very high returns on AMC. So that's it for me. I hope you guys enjoyed this video. And if you did, please don't forget to click on the sub, like, and bell button so you're going to be the first to know when I upload anything new. And stay close to shore. See you guys.